What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 46. It's December the 14th, 2023. We made some trades today, so let's get into it. All right, so the first thing we need to talk about, let's talk about yesterday's closing price. Now, yesterday's closing price is on part 2, and that's at 37,487. So remember that price level. So I made some trades in the pre-market, so let's go ahead and talk about that. So trade number 1 right here. I went long at the bottom of the zone established between higher low B right here and lower high C up here. But what I learned is that I need to hold my best setups because this was a perfect zone trade that I was looking for. Prices were trading within a well-defined zone between B and C. All right, they were bouncing back and forth, back and forth. So more than likely when they came back to test the bottom level again, I need to go long and then take prices back up to the top of that zone or the top of that range. Now, that's what I should have done right here, but I got a little bit scared because I saw prices go against me just a little bit. And then when they came back to break even, I decided to get out because I just wasn't quite sure if the range would hold up. But if the range was already the range and I went long for a reason, then that means that I just need to hold my best trades. And that really comes down to just being able to accept the risk that comes with any trade that you take. Anytime you get into a trade in the market, you have to understand that the market can either go your way or it can go against you. Those are just the two probabilities that you have to deal with. So you can't just assume that the prices will never go against you. And when they do start to go against you, you just immediately get out. It's a reason that I trade with a stop. My stop is at a certain level for a certain reason. So if the trade is really, still in the process of working out, I should just give it time to do what it needs to do if that's my best setup. And in this case, this was my best setup, so I should have held this one. So that's the biggest lesson I learned. Just hold your best setups and be willing to accept the risk that comes with any trade that you get into. That's very important. So that brings us down to trade number 2 down here. So I went long here at the mini zone between D and E. So this is D right here and this is E right here. And what I learned right here is that it's always better to take the first entry and skip the second one. And I say that because on trade 2, I took a loss because I traded the zone, but I traded the zone after I already saw the initial entry that I should have taken. So let's zoom in and let's take a look at that. So the zone was between D and E. We bounced up. We were going back and forth in between those two levels. Now, notice how once prices came back down on this green candle right here, they did touch the bottom of the zone and then they shot back up to the top. So that's where I should have been going long at. And I saw prices right there. I saw the bounce, but I was a little bit hesitant to get in and I missed that move. And I tried to come back and catch it the second time, but this is why I always say that the second entry is just not as lucrative as the first one. And this is a lesson that I've learned multiple times throughout this year. And this trade really happens like this because you got to remember that everybody that wants to take that setup, more than likely they took it already and they took profit. So they're probably happy right now. So they're not looking to get back into that trade again. So it's just not as much participation the second time around as it was on the first occasion. So it just makes the trade less likely to work. Now, there will be some occasions where that second entry does work, but more likely than not, anytime I get in for the second entry, it doesn't work. So that's something that I got to remember. If you don't miss if you miss the first entry, don't chase the market when it comes back and tries to give you a second entry. Instead, just wait for a better opportunity and wait for prices to be a lot more clear before you make another trade. So that's what I learned right there on trade 2. And that brings us to trade 3 now. Trade 3 was pretty much just a continuation of trade 2 because I re-entered trade 2 as prices spiked back through my original entry price. That's one of my rules right there. Anytime I have a trade that goes against me that I feel like went against me a little bit prematurely and the market scenario still holds up, meaning that if I thought it was a zone before and we broke back into the zone, I should be going long once again. That's my rule, so I went long right there at trade number 3. The only thing about this trade was that it came back to break even, and that happened because I just left points on the table that should have been taken. Because when I took trade 2, I was only aiming for 10 points. I went long at 75. No, excuse me. I went long at 37,576. And I was just looking to take prices back up to 586 and get a 10-point scalp towards the top of the zone, and that's it. And that trade went against me. But when trade 3 came back and I re-entered, prices came all the way back up. Let's zoom in a little bit. Okay. So prices came all the way back up to 585 after I went long at 575. But because I was aiming for 86, I just refused to get out at 85. And I pretty much just watched prices come all the way back to my break even. And I had multiple chances to get out anywhere between 75 and 85 and just lock in some type of profit, but I didn't do that. And I think that was the greed getting to me a little bit. This right here was not a continuation trade that I hold towards the next level above. This was a zone. This was a zone trade where I take it from the bottom of the zone back up to the top. Now I didn't make it all the way back up to the top, but it came close enough where I could have took profit. So at 3, I just feel like when it comes to a zone, I think I said this the other day, but I said you have to be very aggressive on your exit and your entry for the zone, because when the zone moves, it moves from extreme to extreme and it moves fairly quickly. So you're not going to have a lot of time to think about what you want to do when it gets to the extremes of the zone, which means that you need to know what you already want to and already have a plan. And then when you see prices come back up there, boom, you exit your position and you take those profits, because they will come back more than likely to the other side of the zone, because that's just how a zone works. So you got to make sure that when you have a chance to take that profit, you lock that in. So then I came back on trade 4 and I went long here at the bottom of the overall range that was established at higher low A. So this is trade number 4 and this is higher low A. Notice how this higher low that got established at 5:30 in the morning today extended all the way across and established the bottom level of support for this entire zone. We came back and touched it once at 6 o'clock this morning, another time at 6:30, one more time at 6:50, another time at 8:15, and then one last time at 8:30 when the retail sales number came out today. So I went long right there, and this was a profitable trade. It was able to make back all of the losses that I took from trade 2, so I was happy about that. But the only thing I would say about this trade is that I didn't hold it as far as I should have. Now, even though it was profitable, it was still more points that could have been had, that should have been had based on my trading strategy, because anytime I trade a zone, as the notes say right here, I need to remember to hold zone trades to the extremes of the zone or the range. And that's usually how I like to play a zone, because like I was saying earlier, when you're trading within a zone, it's going to bounce between those extremes. So right here, we did have a mini zone between D and E, and then the zone expanded, right? So we have a range and a zone. So the overall range was between higher low A and higher low B right here, where we have this this blue level of resistance up above. That was the overall range, and then we had a smaller zone in between D and E. So once prices broke back down and tested the bottom of the range, I should have been able to hold this trade all the way back up to the extremes of the range, which would have actually pushed prices past the little mini zone that we made at D and E. So a lot of times when you have a range, it's not just going to be one singular range where you trade within that. Sometimes it'll be a bigger range inside of a smaller range. Well, nah, reverse that. It'll be a smaller range inside of a bigger range. And you got to be able to distinguish the difference between those two, because that's very important. So on this trade, on trade 4, yes, I did a good job by going long at the bottom of the range, but I should have just held it back up to the top, because it was really nothing at the time that indicated to me that I should get out. And another signal that told me that I should have held this trade was the fact that when the retail number came out at 8:30 right here on this large volume candle, notice how we spiked all the way down, but we started from the top of the zone, right? So the candle opened up here, shot all the way back down to the bottom of the range. And if you look at this next candle, we shot all the way back up to the top of the range once again. So if I didn't have enough confirmation that the zone was legit before, this was definitely the confirmation that really locked in that idea and made me say, okay, this definitely is legit, and that's why I should be aiming to take the rest of my trades. So that was the other signal that told me that, yeah, trade 4 should have been held. And then you add in the fact that it was a higher low right here. That was even more confirmation that I should have took it to the top. So I just got to remember that when it comes to a zone trade, don't just be happy that you have, a good amount of profit. So you say, well, I'm up, so let me get out and lock it in. A zone trade is one of the few times where I actually like to extend my profit targets and expand my profit targets and hold it for a bigger move, because more than likely the probabilities of the other side of the zone being hit are very high. Not always guaranteed, but it's more likely. So in situations like these, when it comes to trading the range, I got to hold my trades all the way back to the extremes. And that's the biggest lesson I learned right here at trade 4. So that was the pre-market session. That was part 1. I just wanted to come in and trade the retail sales release and see if I could get some good moves. So that led me to part number 2 when the market opened this morning at 9:30. So let's go ahead and talk about it. So let's get into trade number 5 right here. Now at trade number 5, prices made 3 higher lows between F and H. So they made higher low F right here, then they continued up, made higher low G right here, then they broke back above the same support level from higher low A from part 1, represented by this blue line right here. And once they broke above that, they came back and made a higher low at higher low H right here. So once higher low H was established, I went long, and I went long as prices broke back above support and then came back to retest higher low H. So that right there is the higher low retest, pretty much exactly what I'm looking for when it comes to trading a higher low strategy. But the only thing I would say about this trade is that even though it was profitable, it was only a small profit, and it could have been a much larger profit. And I say that because once we bounced off of the bottom of the zone and higher low H, prices made it all the way back up to lower high I right here, and I had the opportunity to take profits on both of these candles. So I had about 2 minutes to take profits up here at these uppermost levels. Now my 20-point scalp target had been reached, but I was aiming for 25 points because we were really within the first 30 minutes of the session. So I know that that's a very volatile part of the market. So I said, well, if I can get 20, I can get 25. But, you know, I had an inkling in my mind, something that was just telling me, well, Ty, if you have 20, just go ahead and lock that in because that's a good trade. I mean, what's 5 more points if you already have 20? That's what I was thinking at the time. But I was like, nah, we're in the first 30 minutes. Just let your best trades run. And I ended up letting prices come all the way back down, not to break even, but I think I made about like 6 or 7 points off of this trade, which, you know, it's not bad. It's not good. It's something that I'm willing to accept, but it was more profits left on the table. And I feel like in situations like these, close enough is good enough. So maybe you might be aiming for 25, but if you get 20, maybe 21, just go ahead and take that. You know, you don't have to stress over those last 4 or 5 points because the market will be open all day. It'll be plenty of opportunity for you to make more points and more money. So if you have a good trade that you can lock in right now and it makes sense to lock it in at that level, go ahead and lock that down. Because if you follow this lower high at I, if you follow that across, it lines up with a previous swing high from the first up move that we made once we came back to retest yesterday's closing price on this down move once the market initially opened at 9:30. So we came back to retest that first higher that first high from that swing high. And usually the first high that you make after a swing when the market first opens will be significant in some way, shape, or form. And that's exactly what we saw at lower high number I. So I should have been taking profits right there. So that's a lesson that I learned when it comes to the higher low. Just take it if it's available. Don't be stingy. Don't be greedy. Take what the market is giving you at that time and then look for a better opportunity after that trade has passed. So that's what I learned right there on trade 5. So let's go ahead and discuss trade 6. So at trade 6 right here, I shorted here after seeing lower highs at I and at J that led to the break of higher low F's support. So these lower highs at I and at J eventually pushed prices back past the first higher low that got established in the session at higher low F, which is very significant. So that tells us that, yes, the sellers are in control. We've broken past major levels of support, and we had 2 lower highs that pushed us back down past those levels. So that's pretty much exactly what I look for when it comes to the higher low failure. I look for lower highs to be made that push prices back down below a major level of support from a prior higher low. And then when they come back and retest that level, I short it and look to take it back down to the next level of support below, wherever that may be. So that's exactly what I was able to do at 6 when I entered. But the thing was, I closed this trade before it had time to work, and I just got a little bit scared right here because I saw the fact that I was shorting near the lows of the swing, and that kind of disturbed me a little bit because most of the time, I would say like 99% of the time, I try my best to never go short from the lows of any swing at all because it just usually doesn't work in my favor. But that 1% of the time where it makes sense to actually go short from those levels are when you see those lower highs that are pushing prices past major levels of support. That's telling you that the selling is very strong at that time, and that the buyers are not as strong as you think as you thought that they were, which means that anybody who was long from down here at F or at G, once they saw prices break down this first time, they was like, uh-oh. But then they saw prices come all the way back up to J, so they was like, oh, okay, prices are coming back up, they're gonna come back and test I. But when they get turned around at J, now you have buyers that are kind of trapped a little bit because everybody went long at F and G. Now prices are breaking back below F and G for the second time. So most of the people that are long, if they really want to save their position, they're going to try and get out at break even when prices come back to F. So it makes sense that prices are going to come back and retest that level. But then all of the buyers who are long that are trying to get out right here, all of those buyers are going to sell out, in addition to all of the short entries that are going to go short right here based on prices coming back to retest a previous level of support that's now acting as resistance. So I had all of those things going in my favor, which made it more likely that trade 6 would work and come back down to the next level of support below. So when it comes to situations like these, I got to hold it. You know, I can't be scared of the trade that I take. You know, when it comes to trading, you got to be able to accept the risk, which is what we talked about on trade 1. The same thing happened on trade 6. You have to accept the risk when it comes to your best setups, because those are the opportunities that you have to make money. You got to take the best setup that you can possibly get and just be able to live with the results, good or bad. Sometimes your best setup is going to work. Actually, most of the time, your best setup is going to work. Sometimes it won't, but you can't be scared to take that loss. If you see the trade that you need, you got to take that trade every time and live with the results. Don't cut your best trades too early, because you might miss out on profits like I did right here on trade number 6, and that's very important. So after trade 6, I came back on trade 7 and I shorted right here, expecting for prices to come back to yesterday's closing price, which wasn't too far away. I think right here we were at, I want to say 510. Yesterday's closing price was at 487. So we weren't too far away from that level, and I saw the momentum that prices had going down towards that level. So I just assumed that we should be coming back down to test that price, but that's not what happened today. You know, we didn't come back to test Y.C.P a second time. We came back to test it when the market opened, and that was the last time. Well, that was the last time up until the time that we're talking about now. It might come back and test it later, but for right now, it hasn't. And then prices kind of turned around and came back to my break even at trade number 7. So that's how that trade played out, and I'm not mad at that. You know, sometimes when you're looking for a certain move to happen, it just doesn't. And what you don't want to do is chase the market. What you want to do instead is say, okay, prices were coming to a major level, but they were never able to touch it. So what does that mean? And how is the market going to react from prices not being able to hit that price? And that pretty much led us to higher low K right here. Higher low K is very important because that pretty much established a zone between K and F. So if you look at higher low F right here, follow that across, and you look at higher low K and follow that across, we pretty much had a little micro zone right here. And that's what led me to trade number 8. So at trade 8, I went long here at the lows of the zone, and I went long here at the lows of the zone established between higher low K and higher low F. And then I just took prices back to the top of the zone. And when I'm trading the zone, that's exactly how I want to play it. Because like I was talking about earlier, most of the time when you're trading within a zone, you'll just test the extremes of the ranges back and forth, back and forth, back and forth. So if you go long at the bottom, just exit towards the top and take your profit. So that's pretty much exactly what I did at trade number 8. And then we see prices just kind of play around, and they establish a larger range. Now this goes back to what I was talking about earlier, where you can have a bigger range inside of a smaller range. So this smaller zone right here turned into a bigger zone between 8 and F. So F right here and then 8 right here. That was the bigger zone, and then the smaller zone was between K and F. So sometimes zones can be a little tricky, but you just got to remember that it's multiple layers to a zone. So don't think that it's just one zone and one zone only and that's it. Sometimes it can be multiple, and that's what we saw right here today. So after we made this double bottom at the bottom of the zone right here, we pushed up, made a higher low at higher low L, which led us to break back above the support level of higher low F, which was acting as resistance. But now that we broke back above it, it's support one more time. And then after we broke past that, we established higher low M, and that's pretty much where I took trade 9. So let's read the notes. So at trade 9, prices broke above higher low F again and then formed a higher low at M. So I bought as prices came back to retest the higher low of higher low M. And I went long right here and then just took prices back up to the next level of resistance above at that same resistance level from higher low A all the way back from part 1. And after that, I decided to call it a day. I hit my profit target for the day, so I was happy about that. So I decided to call it a wrap. And overall, I would say that today was a pretty decent day. You know, I made some really good trades. I made some really good moves, and every trade that I took, well, actually, I was going to say every trade that I took was a part of my trading plan. But the only one that wasn't was trade 7. Trade 7 was more so a reaction trade where I saw prices moving down towards the next level that I believe that they would hit at Y.C.P, and I was kind of frustrated that I got out at 6, so I just got back in at 7. So that was the only trade that really didn't align with my trading plan, but even that one came back to break even, so I'm not mad. So I would say overall today was decent. 8 out of 9 trades that I took, they followed my trading plan, and I was able to end the day with profit. So I'm happy about that, but I still need to work on just holding my best trades, because I think me having every trade be successful yesterday kind of messed with my head a little bit today, because I was more so focused on trying to keep that streak going instead of just worrying about making the next best trade. You don't want to focus on a winning streak, because guess what? Every winning streak is going to come to an end eventually. That's just how the market works. You take wins and you take losses. Sometimes you'll have days where everything works. Sometimes you'll have days where everything doesn't. But most days will be a mixture of wins and losses, and hopefully you come out on the winning side. So don't just try and get out of your trade as quick as you can because you don't want to take a loss, like I did on trade 6 and like I did on trade 1. Those were some of my best setups. If we go back to trade 1, that's a zone trade. I should hold it to the top. That's what I always know that I should do. Same thing on trade 6. It's a perfect higher low failure setup. I should hold that until my profit target gets hit. So don't get caught up in the streak that you might be on, or don't try and run away or avoid losses, because avoiding losses usually is what makes you take a loss, because you're focusing more so on the results rather than the process. You got to look at the trade that you're in, look at the reasons that you got in to that trade, and if the reasons that you got into that trade are still holding up, then you keep holding that trade until it hits your profit target, or until the market gives you a signal that clearly indicates that whatever trade you were in before is starting to look a little bit shaky. So that's the biggest takeaway that I had, and the biggest thing I really need to work on. Just take your best setups. Don't worry about the results. Just worry about staying in the trade until you see something that tells you that you shouldn't be in it. So I think if I can clean that up, I should be able to come back tomorrow and have a pretty decent day. As long as I stick to my trading plan like I did today, I feel like I should be able to close the week fairly strong. I was trying to do that last week, but ran into a little bit of problems. So I want to make sure that this week I close the week off strong like I know that I should. So I got a lot of studying to do, a lot of work to do, and a lot of improvements to be made, but I believe that I'm on the right track. So I appreciate you guys for tuning in with me today. It's been a pretty good day so far. I hope you learned a lot about making sure that you just take your best setups and hold those trades until you can't hold them anymore, or until the market just gives you a signal that tells you that you shouldn't be holding it, because I know I learned a whole lot about that today as well. I'll be back tomorrow on December 15th, Friday 2023, ready to run it back one last time. But until then, you guys, have a good one, study hard, and take it easy.